Thank you, Tapio, for the confirmation. Good morning, everyone, once again. Thank you so much for joining our webinar today. My name is Rumbidzai Munyavi, and I'll be your moderator for the day. I would like to thank everyone who has just joined, and I can see our presenters are in the room as well. So just a few housekeeping rules so that our webinar can go well. So the first thing, can you please make sure that your mic is muted so that we avoid any distractions? And also make sure that your camera is turned off as well for distractions and also to save data for you to be able to hear everything properly. The other thing is we're going to have a Q&A session at the end after all our presenters are done. So make use of the chat box if you have any questions. If you're using your PC, you can check on the top. There's a tab that says chat with a little bubble. That's the chat box where you can then input all the questions that you have that our presenters are going to then take a look at after we're done. So since we already have a full house, I'm thinking we can start. So our first presenter for the day is going to be Mrs. Corinne Madana. So I'm just going to read Corinne's profile, and then I can leave the time to her so that she can go through her presentation with us. So Corinne V. Madana is a seasoned financial professional with over 20 years of experience in Zimbabwe's capital markets. She's a licensed stockbroker, compliance officer, and the founder and managing director of Invest IQ Oak Wealth Private Limited, a stockbroking firm she launched from the ground up in 2025. Under her leadership, the firm successfully obtained regulatory licenses and began trading within months. Previously, Corinne spent over a decade at EFE Securities, where she rose through roles including compliance officer, accountant, head of trading and research. She helped position EFE among the top 5 brokerage firms in Zimbabwe, led capital raising initiatives, trained junior staff, and advised on high-level corporate and listings. Known for her strategic acumen, regulatory sharpness, and market intuition, Corinne blends technically excellence with a strong moral compass. She is passionate about financial literacy, ethical investing, and empowering retail and institutional investors. She holds multiple professional qualifications, including in auditing, long-term insurance, and estate agency, and was elected treasurer of Stockbrokers Association in 2022. So I think I'm going to leave this time to Corinne so that she can go through her presentation. Thank you so much.
Hello, everyone. I just want to check if I'm audible.
Yes, you are, Corinne.
Thank you. Thank you to the ZSE Holdings team for inviting me to present about something that I'm very passionate about, financial literacy, and to talk about the stock market. Thank you for the time that I've been afforded. I will start right away with the presentation. Allow me to turn off my mic as well as my camera, and then have the screen shared. Thank you. Could you confirm if my screen is visible?
Yes, it is. Can the others just confirm in the chat box?
Okay, thank you so much. I see hands up. I believe all is in order. So today we want to talk about the stock market, the stock exchange. We have ZSE Holdings that was recently listed, and ZSE Holdings has got two exchanges that it manages, the Zimbabwe Stock Exchange and the Victoria Falls Stock Exchange. And they also have the Zimbabwe depository that settles those trades, and they also have the Victoria Falls depository. So we're going to talk about what is the capital market, who is involved, about ZSE and about VFX. So for Corinne Madana, my introduction to the stock market was when I was in high school. They are colleagues of mine, fellow Form 6 students who were trading on the Zimbabwe Stock Exchange then. These gentlemen were three of them, and they would buy the pink paper every Thursday. Our school was 17 kilometers out of Gweru along the Mvuma Road. So they used to receive the Financial Gazette through the ice cream man. So I would meet them going to get the pink paper from the ice cream man while I would be going to buy some ice cream with friends. That was my first encounter with the stock market. That was my first encounter with the capital markets, though I did not trade. Fast forward to many years later, I got a job at Purpose Asset Management in 2008, January. That was my next encounter with the stock market. But believe you me, had I started trading on the stock market in 2001, when I was in high school with my classmates, I would be a millionaire right now. So this is what pushes me to talk about the stock market the way I do. And that's what pushes me to share as much as I can. So besides that first encounter in high school with classmates that were trading on the market, I've had several encounters thereafter. And what I've seen and noticed over time is that when one is adequately educated about the market, they are able to do so much more. So today we want to start with the myths of the ZSE. When I was younger, I would see others buying shares and buying the pink paper to track their investments. And I thought, that has got nothing to do with me. Let me carry on with my life. But I would like to say that knowledge is power, and one should be adequately knowledgeable to be able to make the right decisions. I'm sure on our screen we are seeing the different myths that are there. I just picked four that spoke to me the most. And I believe others have other myths about the ZSE. I'm sure you can just pop them in the chat box and then we can address them later in the question and answer. And maybe our presentations will also assist. So we have the myth that investing on the stock market is gambling. It's a lotto, and you have to be very desperate. I would like us to dispel that myth and say that the ZSE and the VFX are regulated by the Securities and Exchange Commission. Therefore, there is oversight of the Reserve Bank as well in the movement of money. So it is not gambling and it is not the lotto. There are those that also say that if I invest on the stock market on the 22nd of August, by the 28th of August, my money would have gone up 400%, 3,000%, or I'll be super rich. So unfortunately, I'm here to burst your bubble and just advise you that the ZSE is not a way to get rich quickly. It is a process. You have to go through the motions. You have to invest, and wait it out until you make a profit or a return. Abantu bathi nxa unga-investa ku-stock market, i-market ingawa, kumbe i-market ingaba le-loss, lawe imali yakho siphelile. Kana tichitarisa msika, we often say, kana msika ukadona, tikaona pa news, pa ZTN zvanzi tikawadona, zvinoreva kuti ininiwo ndaita loss. If you experience or see a dip on the market, if Econet price goes down from $5 to $4.52, as it is trading right now, you would have not made a loss on your particular shares. The market has gone down, but your shares, until you decide to sell them, is when you make a loss. And then others say, well, I'm sure those companies that are listed on the exchange are trading there for themselves. It has nothing to do with me. I'm here to help you and dispel that notion that as much as there are companies that are listed on the exchange, us as ordinary people can buy shares. As a student in high school, as a recent graduate, as a hardworking mother and a housewife, as ugogo who's receiving pension from NASA, as a young person, you can receive some money in your account as pocket money, or you can receive a profit in your business, and that money can find its way on the market. It is not only for the big corporates or the SMEs or someone who's registered. Buying and selling on the stock market is for ordinary people. So what is this market that I keep talking about? I keep saying buying and selling on the market is for ordinary people. So the market is where companies raise money for any transactions that they have. Governments are able to raise long-term investments. So as a company, you may have a project that you have. So you have things that you sell. Maybe you sell lip gloss. And for you to continue to manufacture and sell more lip gloss, you need money. So when you've gone to the bank has told you there are some terms that you need to meet, and you're not able to meet them in the short term, but you have an order for lip gloss and you need to make more lip gloss. Where do you go to raise this money? So the primary market, the primary capital market, is where one can go to be able to raise that money. So maybe you have an order to manufacture 1 million lip gloss items, and the cost to manufacture is 50 cents per lip gloss, which means you need 500,000, and you don't have that kind of money. You can issue some shares in your company, and those shares, you sell them. You go through the processes of selling your idea, to write a document to say, I have this manufacturing plan that I have this market, and this is the cost that I have. So for you to be able to help me raise this money, I'm going to offer you capital. I'm going to offer you equity in the company. So for every dollar that I need to raise, I'm offering you 1% of my company. So that's how the primary market works. So in the primary market, your document goes out to the public. When the document has gone out to the public, the money that is raised comes directly to you as an issuer or as a company, as a lip therapy company, for example. So that's where the primary market works. The money that is raised goes directly to the company that is raising the money. Thereafter, there is the secondary market, where those who have bought shares in this lip therapy company are able to trade those shares. So Corinne was able to buy shares in the lip therapy, and then now she wants to sell those shares to someone else. So in the secondary market, that is where already issued shares that were issued in the primary market are able to trade. Now the company, Lip Therapy, the company that I have just formed here, Lip Therapy doesn't get any of this money. Lip Therapy has already raised their money in the primary market, and now we're in the secondary market. Corinne bought some shares, and now she wants to sell them. She bought them at $1, and in the secondary market, she can place her offer. Her offer is what price she wants to sell them at, and she can place these shares at $20. And if someone decides to buy those shares from Corinne, for example, Tatenda buys those shares from Corinne at $20, the money that is transacted between these two goes to Corinne. It doesn't go to Lip Therapy Company. And thereafter, the shares are now owned by Tatenda. So the investors are there to bridge between the borrowers and the issuers. So Lip Therapy needs to be very convincing in the primary market so that they are able to raise the 500,000 US that they need to manufacture more lip gloss. And the secondary market, where the trades happen, is determined by demand and supply. So let's say Corinne has got 10,000 shares that she's selling at $20, and then we have another person who's called Grace, who has got 5,000 shares, and she's willing to sell at $10. So for example, Grace will be able to sell her shares faster and easier because she's offering them at a lower price. But it could happen that Corinne will be the only person selling at $20. And then she will sell maybe 1,000 at $20, and she realizes, oh, I'm the only one selling. I've sold 1,000 at $20. Maybe I can try and sell those shares at $50 and raise a bit more. And because Corinne is the only one who's selling, and those that want to buy into lip therapy will be forced to buy at $50 because Corinne is the only one selling. But the earlier situation that I advised, where there was Grace who's selling at $10, and then Corinne was also selling at $20, the buyers will prefer to go to Corinne. So the secondary market trades on discovery, price discovery, where the demand and supply is the one that drives how it will trade. It also can happen that Corinne is selling at $20, but there's no one who wants to buy. She may be forced to reduce her price to $1.05 so that she can get someone who may be interested in those shares. So we have, in the capital market, we've got the primary market where new capital is issued. Then we've got the secondary market where the investors who participated in the primary market are able to sell those shares that are already in existence. The market. So the market is a web of well-connected parties. It is actually a team sport where we've got the strikers, the midfielders, and the defenders. So we have different people who are playing a different role in the market. So up there, we've got the ZSE Holdings, but even above the ZSE Holdings, we've got the Securities and Exchange Commission, which regulates the ZSE, regulates all these other participants whom I'll speak to. So now we're in the secondary market. In the secondary market, the investors that bought into lip therapy, our example for the day, are not able to buy and sell shares when they meet in town. So they cannot go meet at Karigamombe Center and say, I would like to buy and sell FBC shares, would like to buy and sell Masimba shares, or would like to buy and sell the Eagle REIT. So all companies that are listed on an exchange have to trade on a market. And the market participants, as I mentioned, we've got the Securities and Exchange Commission of Zimbabwe that regulates the markets and that regulates the participants. So for an investor to buy any share, they have to go to a stockbroker of choice. Rumbi, I would like you to please put the list of stockbrokers in the chat so that the participants of the webinar are aware of the link on the ZSE website where they can shop around and find a stockbroker. So an investor, for them to buy shares, they have to go to a stockbroker. When they go to a stockbroker, they have to fill out adequate KYC documents. The stockbroker will require them to fill in some forms. The stockbroker will require of them a passport size photo. The stockbroker will require of them banking details for them to be able to receive dividends, to be able to receive the proceeds when they sell. So one needs to have a bank account and be able to fill those details for the stockbroker. One needs to have a proof of residence to show that they reside somewhere. One also needs to show that they have an identity. So one needs to have show proof of existence. So one needs to have an ID. One needs to have their passport. And for the minors who will be trading on the stock market, a birth certificate is required, as well as the ID or the passport of their guardian. So this is what an investor needs to be able to buy shares on the stock market. So once their documentation is in order with the stockbroker, an account will be opened for them. So at this point, one needs to decide and know their financial plans, as well as their risk appetite, to know, am I investing on the Zimbabwe Stock Exchange, which trades in ZiG, or am I trading on the Victoria Falls Exchange, which trades in US dollars? Or am I trading in both? Because the forms that one is required to fill in are different. So the one for the Zimbabwe Stock Exchange is in two parts. We have the Chengetedzai Depository and the Zimbabwe Stock Exchange Depository. So if you're trading in ZiG, you're required to fill in those forms. And the stockbroker will have their own form that they require you to fill. So when you're trading on the Zimbabwe Stock Exchange, you have three forms to fill in: the Chengetedzai Depository form, the Zimbabwe Stock Exchange Depository form, and the stockbroker's form. Then if you are wanting to trade only on the Victoria Falls Stock Exchange, you have two forms to fill in: the Victoria Falls Depository form, as well as the stockbroker's form. So the stockbroker is the one who then places the trades on your behalf. Once you've submitted your forms, the stockbroker will open the account for you to be able to trade. And a unique identifier will be assigned to you, which is your ID, if I could put it that way, but for shares. Your unique CSD number or your ZSE depository number will be assigned to you. This number is peculiar only to you as an investor and cannot be shared or transferred to anyone else. So once this account is opened, the stockbroker will require you to fund your account. The stockbroker is not permitted by law to trade on your behalf until you fund your account. And you fund your account from your own personal account. If it's Corinne Madana, the funds should come from Corinne Madana's bank account to the stockbroker. If it is the company that is trading, Lip Therapy's bank account is the only one that is allowed to transfer funds from them to the stockbroker. So once the funds are transferred to the broker and the broker confirms that the funds have been received, one needs to place an order, and then the broker will trade on their behalf. So when you place an order with your broker, you need to be sure what it is you want to buy, The broker is there to assist you. I'll speak more on how the broker assists you later on, but the broker is there to assist you on what to buy and how to buy it. So once you place an order with the broker then trades on your behalf. When the trade has happened, the broker sends through to you a confirmation that they've traded for you. They are required by law to send this within 24 hours. They send to you the confirmation, what they've bought, the price they've bought it at, and on that settlement, date is confirmed. So as the stock market trades, the stock market trades on a T+2 cycle. So if you buy your shares on a Monday, they are yours on a Wednesday. If you sell your shares on a Monday, the money should be transferred to you on a Wednesday. So the market trades on a T+2 cycle. So on the day of the trade, the broker sends you the confirmation, and the broker can also act as your custodian. The custodian is the one who holds your funds. The custodian is the one who also holds your shares. So our shares trade electronically. We trade on the stock market on an electronic platform. And your shares are also held in an electronic platform. As an investor, you're entitled at any given point in time to request your bank statement in quotes of what you hold, or what we call your holdings report. So your holdings report shows the shares that you hold, and the custodian is the one who takes care of your money. The custodian is the one who takes care of your shares. So you can elect your broker to be your custodian, or you could elect a bank to be your custodian. So once the trade has been done, the client is informed of the trade. The custodian is also informed of the trade, so that the settlement process that the custodian has to do starts to kick in. The settlement is done with the depository. So we've got Chengetedzai depository in the ZSE that will then settle the trades. They'll settle the trades by moving money from the broker or the custodian's account on settlement date and moving the shares from the previous owner to the new owner on settlement. So what I've explained on the buy side also happens on the sell side. Those are the participants that we have in the trading cycle. All right, and the ZSE Holdings is the company that owns the two exchanges that we've been speaking about. And on these exchanges, we have equities, which are stocks, which are shares. So we also have exchange traded funds, which are sort of like a blend of different components or different shares. For example, we have the Made in Zimbabwe ETF. This one has got different companies that are made in Zimbabwe. And then we also have the Casado ETF that has got underlying agriculture stocks that it trades or it tracks. Then we also have REITs, which are real estate investment trusts. One may not be able to own a building right now, but they can own part of a building by investing in a real estate investment trust. And then that is on the ZSE. This is where the ETFs are, and the two real estate investment trusts that I spoke about. These are Tigere and Revitas. And then on the VFX, we have a REIT that has been listed there, the Eagle REIT, and then we have stocks that are listed there. So that is about the ZSE and the VFX. I've spoken about it as well. It's a recent development. It wasn't there in the past. And we also have a bond there. So the difference between the ZSE that I mentioned earlier on is that the ZSE trades in ZIG, the local currency, and settles in ZIG. And then the VFX trades in US dollars. And the transaction costs for each of these two exchanges are different. I know in future webinars, the transaction costs will be spoken about and they'll be well alluded to. So now the role of a stockbroker, the person who assists one to trade on this market. Make sure that when you choose a stockbroker, you choose someone who is able to assist you to achieve your financial goals and your financial plans. And make sure that whoever you're trading with is licensed and you're able to verify that all is above board with them. So in terms of order execution, make sure that you explain to your broker the limitations that you have. So on the Zimbabwe Stock Exchange, the market's shares or ETFs can move daily 15% up or 15% down. So as you place your orders, you need to be cognizant that the market can move up 15% or down 15%. That is on the Zimbabwe Stock Exchange. And on the Victoria Falls Stock Exchange, the market can move 20% up or 20% down. So when you place an order with your broker, you want to buy, for example, Padenga shares, you need to be able to ask them, where did it last trade? How did it trade in the past 3 or so weeks? How would you advise me to trade when I want to buy Padenga? And then when you place your order, you have to specify the number of shares that you want to buy or the value. So for example, you may say, I want to buy 500 shares or I want to buy 300 worth. So it could be the value or it could be the number of shares. So you need to be clear on the number of shares or the value. And also you need to be clear on the price that you are giving them. So you need to give them a limit to say, for the shares that I want to buy, I do not want to pay more than 30 cents, or I do not want to pay more than 31 cents. That is your privilege as an investor to dictate the level at which you want to trade on the market or how to experience the market. So the role of the stockbroker is to execute as per your instructions. And these instructions are preferably sent on email or submitted in writing in person. You could also call to send in your instruction, but the safest and the easiest manner is to send by email and to come through in person and to write your order. So the broker has to ensure that they execute at the best price possible on behalf of the client. And the stockbroker has received sufficient training as well as sufficient experience to be able to execute these in the best interest of the client. And if one feels that they have not been serviced or been served well by the stockbroker, they are able to complain internally. For example, if the trader is not executed well for you, you're able to complain to the management. And if your complaints are not taken up with the management, you are able to take it up with the Zimbabwe Stock Exchange or the Victoria Falls Stock Exchange, and even further to the Securities and Exchange Commission of Zimbabwe. So that the stockbroker also offers advisory service. The stockbroker has to assist you to be able to diversify and time your trades. So, for example, one may come through and say, I want to buy this stock at this price. The stockbroker's role is to then advise the clients to say, at this time, this may not be the best thing to buy. Would advise you to hold buying because of what is in the public domain about this transaction, or we believe that right now the price is too heated, meaning that the price has gone up significantly since the year started, or since we started tracking it as investor and broker. So that is the role of the stockbroker, to be able to hold the hand of the investor to be able to make the best decisions possible. The stockbroker has to advise the client on the listed companies in the sector and what is happening as well in the economy. And they do this via reports. The stockbroker's role is also to settle trades on behalf of the client and to ensure that everything is in order for the settlements of the investor. Sorry about that, just had a small technical glitch. And ensure that in terms of the laws of the land, the investor is complying. The stockbroker's role is also to ensure that the levies are paid to the relevant authorities. So that is the role of the stockbroker. And the stockbroker also is there to make sure that the retail investors, as well as the companies, are well versed on the capital markets, the benefits that they can derive from the capital markets, and how to ensure that they're compliant. And one such is today's experience, where we're going through training on the stock market. So I know the burning question would be, I now want to buy shares on the stock market. How do I know what to buy or what to sell, or when to buy and when to sell? So you need to know the price. I know many people are fearful of buying stocks and to know what they should buy. But firstly, before I go to price and revenue growth, I think as an investor, you need to be deliberate, intentional, and serious about the stock market if you want to enter it and make profit. So you cannot buy a share in 2020 and forget about it until 2025 and then call your broker and say, I think I bought Insco shares in 2020 June. Would you tell me where they are, how much they've grown, or what is going on? If you are now into the business of buying shares, you need to be assertive, not passive. The stock market brings passive income, but it's not for passive investors. One needs to know what they want to buy in, understand it, and make sure that they are keeping tabs. So you cannot buy shares and relax and not know what's going on. Your stockbroker will trade for you, but you need to ensure that you are also following up and ensuring that you understand what is going on. So once you decide to buy a stock, for example, you've decided to buy Insco shares, you need to also take an active role to find out and know what is going on in Insco. So when you buy, the first thing obviously is to look at the price. What is it that I'm buying? At what price am I buying it at? So you can ask your broker to explain to you how this counter that you want to buy has been trading, so that you know that is this the best time to buy in terms of the price. And the best thing to do is to buy when prices are low and to sell higher. So the best time for you to buy is when the prices are low, agreed. But the lows for different people are at different times because of the time that they enter into the market. Now that you've bought, at whatever price you have bought, make sure that you sell higher. Do not sell at a lower price than the price that you bought the counter at. And it's not just about the price. To say I bought the shares at $1 ZiG, but now they're at 3 ZiG. But in real terms, has the price gone up? So for those who want to participate on the ZiG market, on the ZSE, also translate your investment to US dollar so that you know and you're sure that whatever it is that I'm buying at 1 ZiG, the interbank rate is this. When I'm selling at 3 ZiG, the interbank rate is that. Am I making a profit or a loss? Because you could just be looking at the prices, but in actual fact, you are making a loss. So when you buy shares at a certain price, make sure that you are able to track and sell only when you've made a profit at a higher price. So that means that the example that I gave about the myths comes to play here. You've bought your shares at 1 ZiG on a Monday. 3 weeks later, those shares have gone down to 80 cents ZiG. The market has gone down, it has dipped, it has fallen. But your shares, in terms of value, yes, they're at 80 cents, but you do not make a loss until you decide to sell them at 80 cents ZiG. When you wait it out and then you wait for the market to reprice or rediscover or to trade at a different place, that's when you'll be able to sell. So you do not make a loss when the market moves down. You make a loss when you actually decide to sell those shares that you bought at $1. So you bought your shares at 1 ZiG, the market moves down the next day to 80 cents, the following day it goes to 60 cents, the next day it goes to 50 cents, the 3 weeks later it goes to 5 cents, $5, I beg your pardon. So when you then sell from $1 to 5, that's where you make your profit, or that's where you make the gain. Not when the market is trading each and every day. When you decide to sell at a lower price, that is when you make a loss. So if the company trades, the companies are required to release financials. On a quarterly basis, they give trading updates. On a half-year basis, they give unaudited results. On a full-year basis, they give their financials to say how have they been trading or how are they working along. So the revenue growth, when the prices when the revenue is going up and there's improvement, usually that affects what is going on in the market. So for you to know when to buy or sell, you look at the price, you look at the revenue growth. Is this company that I've invested in, is it growing? That will also explain to you, maybe the market has gone down, the shares have gone down, but maybe I should buy more shares. Then you also look at the PE ratio. The stockbroker will explain to you how this is calculated. Some stockbrokers even have it on their price sheet. And this is just a computation of how long it's going to take for the company to repay its shareholders in case it were to wind up. And I spoke about the historical prices. You need to know how the market is trading for you to be able to see these prices have been going up every week. They've been going up maybe 5%. Maybe it's time that I decide to sell and take profit. And then there's the analyst reports. The analysts are called to analyst briefings by the companies, and they ask the companies deep questions. So when they come from those briefings and those meetings, they are able to write reports. So if you were for you to know when to buy or to sell, I would advise you to be a well-read investor to know exactly what is going on in the market. And then how does one make a loss or gain on the exchange? I think I kind of spoke to it, but through capital gains. So when you sell your shares above what you bought it for and the associated costs. So there are costs when you buy shares, there are costs when you sell shares, there are costs. So you need to make sure that you are calculating and putting everything into cognizance, and your broker can assist you in that. Then through dividends. So when the companies are going about their business, they can decide during their board meetings to share the profits with the shareholders. So there are companies that are well known for paying out dividends to their shareholders. So these are the companies that one can look out for. There are people who are well known for buying companies only that are dividend paying. And they make sure they buy a lot of shares because they know that the more shares I have, whenever dividend is declared, the more dividend I have. So there are some who just buy dividend paying companies and they don't buy any others. So you also benefit when there are corporate actions like mergers or their acquisitions or consolidations. So what this means is that the company may decide to give their shareholders maybe bonus shares to say, for every share that one owns, we're going to give you another share. So these transactions that are always advertised by law, the companies have to share this information. And even before they decide to do all these, they have to have an extraordinary general meeting where the shareholders can vote yes or no for the transaction. So yes, I think in a nutshell, I tried to be as brief, but the subject matter requires a lot of time. So thank you for listening in. I know that we'll have a question and answer time later. I see a guest that has two guests that have got their hands up. I will revert back to the host. Thank you for the time. Rumbi, back to you.
Thank you so much, Corinne, for that sound presentation. I think I'll just allow these two people to just say what they need to say, and then we can continue to the next presenter. Leslie, you can go ahead. Hello, Leslie. Okay, I think I might have lost him. So I think we can just go on to the next presenter. And then we can just have all the questions when everyone has presented. So the next presentation that we're going to have it from Tatenda Karijinemaungwe. He's an investorpreneur actively involved on the Zimbabwe Stock Exchange and the Johannesburg Stock Exchange, with a keen interest in emerging markets and strategic capital growth sectors. He shares his insights and activities on platforms like X, formerly known as Twitter, where he discusses his investment strategies and market trends. Tatenda has adopted an investment strategy which blends elements of value investing and long-term holding, where he engages with market trends, offering insights into both the local ZSE and broader economic context. He shares investment knowledge with fellow investors to ensure a broad understanding of investment principles in Zimbabwe, which sharpens them as they pick assets for their portfolio. So we're going to leave this time to Tatenda Karijinemaungwe, who's one of our investors on the stock market, to just run down his presentation, and then we can take all the questions after he is done. Tatenda, I'm leaving the stage to you.
Thank you so much, Rambi. Thanks to the Zimbabwe Stock Exchange team for inviting me to such a valuable platform. It's always an honor to be here, and thanks a lot to everyone who's tuned in to listen to one or two issues which you're about to present. So it's an absolute pleasure to be here, and especially seeing my fellow colleague Corinne Madana. I should say, when I decided to start commercial investment, I was actually going to EFE Securities. That was my first broker which I was dealing with, and Corinne was in charge of the unit for compliance. So I would always, when I was always speaking to the broker, Brenda and Phineas, I would always refer Corinne as the Iron Lady, because she made sure we would comply as we were investing on the market. And I'm happy she was presenting most of the rules and regulations which are needed for you to invest on the stock market. So it's a pleasure to see you, Corinne, and also congratulations for setting up your firm. Done on that. So I'm here basically to speak from an investment perspective, from an investor's point of view. So an investor is a person, institution, organization, or government, or any of the above, or a mixture of the above, who actively gets on the market and allocates financial capital on the market. And the market is a broad term. And it has a number of assets which you can invest in. So the whole objective of an investor when they get on any market, the primary objective is to make a positive return on investment, which is what we call a profit, over a predetermined period of time. Then also that profit, which they're expecting over a period of time, should be attached to a certain level of risk which the investor can tolerate. So before you engage on any investment, you should know, are you able to stomach the kind of risk that asset is attached to, so that you then benefit from the return which that asset brings forth. So that's basically the job of an investor. So the whole idea is to place financial capital. So anyone who's wearing my shoes or wearing my jacket understands that you don't just pick capital, you don't just get capital, especially in the environment we're operating from. It's very difficult to access loans from a bank. It's very difficult to raise money from relatives, friends, or colleagues. So the moment you finally have capital, it needs to be directed straight into the market and bring back a positive return. So it's like you're a military commander and you have your troops. Before you dispatch them, the objective is to gain territory. The objective is to have as little casualties as possible on your team, yet you've gained territory, capture territory, and then benefit or convert that territory to your advantage. So that's the primary objective of any investor. So my job when I wake up every morning, of course, I go for exercise. After exercise, I sit on my laptop. And what I then do is to look at my portfolio. And a portfolio is a group of assets. And assets bring you future cash flows. So the whole stock exchange story is based on buying shares. So it's a platform where we buy shares. Shares are assets. So assets are also part of that portfolio. So you then look into your portfolio. What assets am I putting there? And the stock exchange has a number of advantages. But the reason why I love it so much is that you get on the market, you do your analysis, you buy your shares. At the end of each month, you don't have an overhead, unlike other assets. If I'm running a business, if I'm running a property portfolio, a bus company, a fuel station, whichever, at the end of every 30 days, I've got overheads attached to whatever investment I've placed my money on. But on the stock exchange, there are no overheads. So when you don't have overheads, but you have an asset which can benefit you, then that's a plus before we even start. That's a plus. Because overheads are one of the main things which erodes capital, main thing which erodes your working capital and cash flow, disrupt cash flow. So stock exchange, when you buy these equities, you don't have an obligation at the end of the month to pay rent, salaries, and other overheads, which I might have not mentioned here. So that's just one of the advantages of the stock market. And then in your portfolio, you now have shares. But when we say shares, we're not just saying go on the market and randomly buy. No. You have to be very strategic in terms of picking out shares. And the whole concept is to buy good companies. Whoever has a pen and pencil at the moment, you need to just write this down. You need to buy good companies at low prices. That's the whole point. Buying good companies at low prices. And how do you find good companies? And how do you know that the price is low? So we then engage in what we call technical analysis and fundamental analysis on the stock exchange. So fundamental analysis, we're simply looking at a company. You know, when these companies operate, they produce a set of financial documents. So there's the income statement, there's the balance sheet, there's the cash flow statement, there's the notes to the financial statements, there are statements of changes in equity. This set of 5 documents, which you call financial statements, do guide you to tell you whether a company is good for buying, good for selling, bad for buying, or bad for selling. So those are what we call the fundamentals. So the fundamentals show you what to buy, or they show you what to sell. Okay. Then on the flip side, there is what we call technical analysis. So in technical analysis, especially in our environment here in Zimbabwe, you need to focus on what is called price action. So price action just tracks the price of a share at any given moment in time. So every day when a share trades, it records a number. Tomorrow it trades, it records another number. At the end of the week, month, year, decade, you'll see a worm going up and down or straight, which confirms how the share price has been going. So when you look at that price action, you can tell that the lowest price for this share is X amount. The highest price for this share is X amount. The mid-range for this share is X amount. So that's basically technical analysis. And I liked one point which Corinne spoke about. She said, when you're tracking your investment, also peg it to the US dollar so that you know you can then check in real terms how much have you paid, how much have you made as a real value, a real dollar gain. It's very important since especially the stock exchange, the Zimbabwe Stock Exchange trades in the local currency. So the technicals show you what time to buy, when to enter, and when to exit. Because remember, we said it's a worm which shows you the direction at which the price is going. So it shows you exactly which point you're supposed to enter Delta, for example, which point you're supposed to exit Delta, for example. And when you then mix the technicals and the fundamentals, what I call the techno-fundamental analysis, you then have a very clear picture on what to buy and what not to buy. And this then brings me to my role as a retail investor. So retail investors, we've got one unique advantage over institutional investors. Okay, the major disadvantage obviously is that they have more capacity, they have more power in terms of buying power on the market or selling power on the market. But as retail investors, our unique advantage is that our decisions are spot on. We don't have a board we have to report to. We don't have a credit committee we have to report to. The moment you see Delta at its lowest, you strike immediately. We're not going to have to call for a meeting and all. So we are very flexible in our strategy. And that flexibility will make you grow in tremendous forms. So yeah, that's basically, in a nutshell, what I do as a retail investor. So why should we focus on the stock exchange? Right. So when you invest on the stock exchange, I spoke about the absence of overheads on the stock market. That's a brilliant one. You know, in the 20th century, the best way to make money is cost cutting. So when you don't have overheads, you've already won before we even started. So why should we benefit? Why should we focus on the stock exchange? Firstly, there's what we call capital gains. So you come on the market, you do your technicals, you do your fundamentals, you then get to a point where you realize, okay, I'm going for stock ABC. When you buy stock ABC, we don't have a holding period which is predetermined. Your treasury bill, you're looking at 90 days minimum. You see these 90-day pegged treasury bills. You can buy shares today and sell them tomorrow. You know, of course, there are tickers on the market which allows the market to go a maximum of 15% either way, up or down. But to your advantage, within a week, you might even hit almost 100% if you chose the right stock at the right price. So you benefit a lot from capital gains. Then after you've benefited from capital gains, when you then sell, the charges attached to capital gains are less than 3%. So you find that you have a stock without overheads and also which has a charge which is not more than 3%, which is quite reasonable considering the fact that we're an emerging market. Emerging markets are usually, you know, associated with high risk and high returns, but also high charges. So these charges are quite reasonable. So you benefit from that capital gains. Then once you benefit from that capital gain, we go back to the example which I gave, the military example. Your troop has increased, your battalion has increased. You now have more soldiers to deploy, attack, and get you more in terms of return or in terms of territory. Then after that, you've got benefits like dividends. So when a company is operating, every quarter they issue out what is called a trading update. And in that trading update, they tell you how they've been performing against macroeconomic conditions. They tell you their vision. What are they going to do in the next 3 months? What are they going to do in the next 6 months, 1 year? Okay, the target there said 3 months back, where are they? Where are they going? And part of the information involved in a trading update is a dividend section. So you'll find that some companies declare dividends quarterly, some declare biannually, some declare annually. So you've got an advantage. If you go for dividend stocks, you're going to get dividends. And after you get those dividends, you know, the withholding tax on a dividend is approximately around 10%. This is just money coming through. It's got nothing to do with capital gains. So the first benefit is capital gains. The second benefit is dividend. So depending on how big and structured your portfolio is, some people live off dividends of their life. And annual salaries being earned by the public, most of the public, in probably 5-6 years can be received by one investor in a quarter. So the stock exchange really gives you that platform where you can plant your seed and you magnify your seed and you benefit from compounded returns. As Corinne was saying, at times shares do mergers, they do acquisitions. There are bonus issues or bonus shares which are attached to these particular events. You see, in Zimbabwe, our situation is very interesting. You'll find a share ABC just announces that, okay, we're now moving from the Zim stock market register, we're going to the Vic Falls stock market. You know, all of a sudden a bull run comes. So these are part of the benefits you get specifically from investing on the Zimbabwe Stock Exchange, which are not really codified, because if you read books on stock exchange, they tell you about capital gains, they tell you about bonus issue, they tell you about dividends. But just a mere announcement that we are moving from one exchange to the other, you will see a mother of a bull run. So these are the benefits which you get from investing on the stock market. So I think that after speaking about the benefits, the disadvantage of investing on the stock market, which I've really seen as I'm walking my day-to-day path, is that you become abnormal. Because as people are crying about economic issues and all, to you it's non-existent. Because here you are, you have a platform which earns you money, which earns you capital gains, dividends, etc., and it does not tax you overheads. Then you're seeing your portfolio growing in leaps and bounces. So on the flip side, you act as if you're a person out of your mind. Because when people are now crying over economic issues, you're like, guys, come on. Okay, fine. Tell me, did you have breakfast? Yes, I did. What did you have in your breakfast? Well, I had bread, bacon, eggs, tea. And I ask people, okay, fine. Which bread did you eat? Baker's Inn. That's Insco. Do you have Insco shares? No. To me, that's a red flag. Okay, you had eggs. Where did you buy your eggs from? Pick and Pay. What brand were your eggs? Ivan's. Do you have shares in Insco? No. Red flag number 2. Okay, fine. We go on the third. You had bacon. You had Cocoa. That's Cocoa producing bacon for you. So all these people are participating in growing these companies, but they're not benefiting in terms of the profit which these companies are getting. When you travel around Zimbabwe, even in the most remotest of the remote place, you see a Castle Lager, you will see a Zambezi, you will see bottle stores, you see people holding super, enjoying themselves. But then you ask these people, who's supplying this beer? They know, they even know it's Delta. Do you have a single share of a Delta, of Delta? They'll tell you, no, we don't. And look how profitable Delta is. So at the end of the day, we are the consumers of these products which are being distributed by companies on the stock exchange. So as we enjoy these products, we need to also buy into those companies. We're here on this space. When you look at telecoms in this country, Econet is boasting of more than 70% in terms of market capital, in terms of market share. Okay. So every morning you're on your phone, you're texting, you're buying data, be it WhatsApp data, be it normal data. You budget $5 a day, $5 a week, just for your phone, just to juice up your network. Econet is getting $3.50 off that $5 from each person every week. Do you have Econet shares? They'll give you a bold no. You see, so this is the reason why people then, don't understand what exactly is happening. A very interesting scenario is the figures which came out of IMF last week, just 7 days ago. Zimbabwe's gross domestic product is now at 44.19 billion United States dollars. Okay, 44.19 billion United States dollars. Right. Under the rules of thumb, the stock exchange should have a market capitalization of 60% of the gross domestic product. This is just a rule of thumb. So if we peg 60% on 44.19 billion, it means the stock exchange should be having a market capitalization of about 26.5 billion. Okay, both the Vic Stock Exchange and the Zimbabwe Stock Exchange. As of yesterday, the Zimbabwe Stock Exchange had a market capitalization of 59 billion Zimbabwean gold dollars, which translates to 2 billion United States dollars. Again, as of yesterday, the Victoria Falls Stock Exchange had a market capitalization of 1.3 billion United States dollars. So combining the two, the VFEX and the ZSE, we're sitting at a market capitalization of $3.3 billion. $3.3 billion against an indicator, a global indicator which is used to value stock exchange, generally. of 26.5 billion. It means the stock market is operating at 12% of its capacity. What does this mean? This means we've got a market here which has an opportunity to multiply ninefold from 3.3 billion to 26.5 billion. If you place in, this is what I'm known for on Twitter, if you put $10,000, we're saying the potential maximum return is going to be how much? $90,000 based on the market capitalization vis-a-vis the GDP. And this is the rule of thumb, right? 60%. But it doesn't mean the market operates on that rule of thumb. Everyone here who's driving around Harare, you're seeing malls being built, supermarkets being built, service stations being built, cluster houses being built. You know, we are slowly transforming and, you know, gaining our value. And property is one of the offsprings where you see economic activity as you're driving. Because when people make a lot, as I was saying, when building your portfolio, property, equities, property is one of them. So all these erections of buildings, cluster homes and the like, which are happening in roads, are just a symbolism of what's happening in the economy. So if you put $10,000, here you are, you can make 90,000. But this 26.5 billion is based on the 60% rule. But an economy can operate in premium. So 60% could be an understatement. My view is that the stock market has the capacity to actually cross or be 1:1 with the GDP. The most painful thing is that here we are, the locals, running around doing our business, going up, going down. We own 0% of shares on the stock exchange. Here comes foreigners. They just come through, place their funds there, then they harvest that ninefold. After they harvest that ninefold, we, the locals, are busy running away from our country into the diaspora, looking for opportunities, looking for jobs. But here is an industry which multiply your money. You know, it's, even if you put it percentage-wise, it's quite gigantic. So we are focused on getting CSOs to go to the UK. We are focused on getting permits and visas to go to other countries and, you know, do these menial jobs, because the moment you leave, no matter how qualified you are, you're not going to get that benefit which you are getting home in terms of position, employment, etc. So we're going out and foreigners are coming in. Every time you turn your head left or right, you're going to see an Asian man there, you're going to see an European man. They're coming in to take opportunities. Go to Home Affairs. Those guys are queuing, fighting for Zimbabwean citizenship, you see. And part of the market where they hit is the stock exchange. And they call it foreign portfolio investment. So before they come and, you know, deploy their capital physically, they look at these figures which I gave you. The GDP is operating at what, 44.19 billion, and this is 2024, by the way. What is the stock market operating at? 3.3 billion. What's the next thing? They aggressively start buying shares on the stock market. And the next thing, they get dividends. And each dividend, Zimbabwe, I've noticed, I've monitored, the dividend yield in this country is a minimum of 5% per declared dividend. In other countries across the globe, 5% is what you get annually for placing your money, be it on the money market, on banks, or on treasury bills or other financial instruments. But here we are, you're getting a dividend of 5% per quarter, plus capital gains. And, you know, so it's quite saddening. So these platforms, the advantage now is that at least you start pushing that voice into the public, and you start having inquiries. People start following. They come on Twitter, they visit stockbrokers, they interact, they start, you know, doing a little bit of economic activity. And I'm very happy that at least the word is spreading out. 2 to 3 years back, I remember Kudzain Bayiwa would run with her hashtag on Twitter. I would run with Walala Wasala. Kudzai Sharara was on the other side pushing as well. We had guys like the center maker, Alphonse Maketo. He's been writing about the stock exchange. So far, he's written 3 books. So we're now seeing more information going into the market, more participants. And why I'm saying active participation of the local men on the street is increasing. I'm seeing the volumes from retail investors. We thank the exchange for launching ZSE Direct. We also thank the escrow group for putting in C-Trade. The volumes coming out of C-Trade and ZSE Direct are amazing. It's actually a step in the right direction. And I love those, that participation of retail investors, because they just come through and distort the market. So it's no longer as predictable as before, because if institutions don't trade in a single day, retail investors can trade the market 15% up or down depending on what they're discussing in their various WhatsApp groups and the like. I remember the other time they would go for get backs, and in those WhatsApp groups they would say, one would just say natural kumana natural, which means guys on it, and natural. And the next morning you just see bids on get backs. So firstly, you have people just participating without much knowledge or information or appreciation of how the market works. But at least that's the first step, because when you get on the market, you then realize, okay, fine, I'm making a mistake or I've made a loss. So what do I do today to make sure tomorrow I won't make a loss? Because I started trading on the stock market as early as 1998. It was paper trading. Then active participation, 2015, where I was now going into this commercial space. And I remember I would make a lot of blunders. I would make a lot of wrong moves on the stock market as I was reading and practicing and. But one thing I learned was that every time I made a mistake, I would go back and revise my mistake. Then I would make another mistake and fail. Then I would fail and fail and fail. And guess what? I eventually ran out of ways to fail. So yes, the best way to swim is not about reading and getting a PhD on how to swim. Yes, in as much as reading is important, but the most important thing is actually jumping in the swimming pool and learning to swim. You need to get yourself wet. You need to navigate the water. You need to know how to manage your breathing system, because you can't breathe when your head is submerged underwater. So it's very critical for people to then take action and start investing and trading on the stock exchange. It's quite critical. So, it's very interesting to speak about the stock market. And one thing I have to emphasize is the issue of strategy. Strategy is key. So for you to win, you need to have a unique strategy. You need to test it. You need to deploy it, and it will give you results. So strategy is key. So in strategy, what are we looking at? One of the issues which I now find myself in, based on the space I'm occupying when it comes to strategy on the stock exchange, is the issue of patience. Patience is key. In a year, I look at the financials, I break them down, I write down my parameters, I write down my targeted entry, my targeted exit. I have a very clear and solid investment strategy and an investment objective which I work with. And one of the things I would do before I got to this place where I am now was to trade frequently and regularly. But now I find myself doing 1 to 5 trades per year. That's why I'm now talking of patience. I find myself doing 1 to 5 trades per year because I patiently wait and watch the market. Imagine every good day of my life, I spend 20 minutes just watching market activity. Who's bidding what? Who's offering what? What's the price? Who's striking where? What's the volume? Why are we here? What is the trading update say? What is the board saying? What is the vision? How do we peg this to the macroeconomic environment? Okay, fine. How do we peg this to everyone is concerned about the currency? The currency has been stable from January to date. So how do we peg that in? How do we peg it to your objectives as an individual? So, you have to be very patient. So you go on the market, you pick out your targeted stocks. I always move with 3 at a time, what I call the tricycle strategy. So those 3, I pin them on the board. Every morning I wake up, I look at those charts, I update and wait. Every time I update my charts, I update. But the day I strike, guaranteed, I'll strike it right at the bottom, right on the floor. And the moment you pick a share right on the floor, you can just close up your laptop, sell the Mediterranean, you are sorted. Because the golden rule on the stock exchange is buy low so that you sell high. So the reason why I have these charts and I trade on a daily basis is to make sure I get the shares right at the bottom, rock bottom. I'm so selfish and destructive on the market to a point that I don't even leave an inch. I buy at the bottom, rock bottom. If it means you're not buying, so be it, rock bottom. Then the moment you pick shares at rock bottom, remember rock bottom, where there is no more bottom, we are right at the bottom. You pick your shares, then you wait patiently for your targeted exit. So there are a lot of factors which then drive prices to then reach your targeted exit points. So policy is one thing which directly affects shares listed on the stock exchange. And especially here in our environment, policy changes every minute. As we finish this meeting, you might wake up, there's an SI there, they're already fixing something. So policy does directly affect your shares, either positively or negatively. But if they affect your shares negatively, when you bought rock bottom, chances are you won't even lose. You remain rock bottom. So policy affects shares. Macroeconomic figures affect shares. Things like your GDP, your balance of payments, other macroeconomic indicators out there. Your financials affect your shares. How did the company perform? What is its vision? Who is the team there? What are they doing? What do they have as a strategy? You find that a company probably doing solar can actually have a bull run if they get ZERA approving them to go off-grid, independent power production permits. Just that announcement that we've been given 100 megawatt license and we have already started procuring, things like that, can even push share prices. So all these factors push prices up or down. But that's why I emphasize the criticality of buying shares right at rock bottom. It doesn't only apply on the stock exchange, it also applies in business. If you want your business to thrive, as a trader, manufacturer, or whichever, I always say squeeze the supplier, which means buying low. Because if you don't squeeze the supplier, the moment you want to supply or sell in the market, you're going to be squeezed by the customers. So squeeze your supplier, squeeze your distribution channels, reduce your costs, do your cost cutting, but don't compromise on quality. Cut it down to a point that you produce the same product at a very low price. The moment you walk into the market, you can sell vis-a-vis or at par with your competitors or just below your competitors, and you make so much profit. This is in business. The same concept applies on the stock exchange. And now, who are my competitors on the stock exchange? They're fellow traders. When I go on the market and I squeeze the seller to a point that I'm buying low, the moment it's my turn to sell, even if I'm squeezed, I'm going to make something out of it. So always make sure you buy low. That's the golden rule. Buy low so that you sell high. Okay. So the moment that happens, your prices go up. So noise makes shares go up or down. Noise. And it could be political noise, economic noise, social noise, technological noise, religious noise. I call it noise. It affects positively or negatively the value of your share. So once you've bought, noise will definitely take you to your desired level. The share has gone up and up and up. And people have a tendency of buying a share when it's going up. They don't like buying it when it's on the floor. They don't like buying it when it's, receding. No, they don't. They always want to join into a share which has already started going up, which is what we call momentum. So the moment other investors are joining, momentum is building. Momentum is building. You should never be driven by momentum or those now joining the wagon. No, you should always be driven by your clear investment objective. If your investment objective from the onset, from the charts, which I was telling you about, was to achieve 80%, the moment you reach 80%, halas, sell, get your money, crystallize it, and you're sorted. The moment you want to hang on and start fighting your investment objective, which has really paid you 80%, you've got a big problem. What am I saying? I'm saying discipline is a major force when you're investing on the stock exchange. You have to be very disciplined. You have to be bold in terms of your decision making, and you have to stand your position and you stand your ground. So Corinne said stockbrokers also help in the advisory part for investors when they come through. That's correct, advisory part. But when I have lunch or tea with Corinne, it's purely a discussion. So, okay, what do you think we should do on this one? How about that one? How about that one? So instead of relying 100% on your broker, have discussions with them. Because the moment you read these financials, read these trading updates, read the notes which they issue out on a daily basis, you become at par with them in terms of information. So you go to Corinne, you say, okay, Corinne, we've got counter A. The PE is this much. The price to book ratio is there. The debt to equity is there. The leverage is there. The press is saying this. Okay, we've got unforeseen circumstances of A, B, C in the future. What's your take on that? Based on the information at hand, what do you think will happen in the next 2, 3, 4 years on this stock? So you should have a moment where you discuss with these brokers. You know what? After the time, they're too busy. You call them, you want investment advice, they don't pick. But when they know you're at that level, they'll pick and invite you, come, let's sit, let's discuss and all. So what I'm saying is make the stockbroker your co-pilot. Don't be a passenger. Make them your co-pilot. Speak the same language. Discuss, at the end of the day, you're blessing your investment, right? These are your funds. So you and your broker should have a very clear mandate of what needs to be done and what not needs to be done. So make discipline a major force in your life. Discipline should be a major force. Then apart from that, you need to read. I don't know how many times I'm going to say this. There is no secret that makes you profit on the stock exchange except reading, implementing, and swift implementing. You need to read. Every morning, you get a trading update from each broker. So what you do, go on that list of broker, register your email address. They send research notes every morning. Every morning you've got research notes on Delta, Inspo, OK, Zimbabwe. You need to read. Then after you've read, you're now pregnant with this information. Then after being pregnant, you then now need that skill of how to convert that information into strategy. That's what makes the whole stock exchange count. That information now, you need an ability on how to turn it into strategy. And how do you do that? I've already spoke about it. Participate, act, jump on it. So if you spend 3 hours reading about the stock market every day, at the end of the year, you'll be in the top 5% of the most knowledgeable investors in the country. Just 2 to 3 hours every day. At the end of the year, you'll be actually a panelist on this webinar, speaking probably about risk management or another area or strategy. So we need to read, ladies and gentlemen. We need to read. You just need to read. The moment you read, you're more knowledgeable. Like I said, I like giving these military examples. When you read, it's like you've really capacitated your military. When you read, you're buying the best artillery there is at that very moment so that you can face the enemy attack or defend yourself, because at times it's you being attacked. But you have the best artillery, and the best artillery to protect territory or to recover territory or to grow your territory is to read. You need to read. Every good day of my life, I spend an hour reading about the stock market, calculating, and the moment I walk out, even asked over a decision of a particular counter, especially if it's in my tricycle strategy, you have the best advice you can have. So we need to read. We need to be disciplined. We need to be patient. And we need to be very ambitious. When I started investing on the stock market, I was never that ambitious. I would get my positive return, but I wouldn't believe I'd made the profit. So it was a very difficult time for me. And I even wrote and penned down a tweet about this. It took me 7 good years to raise $15,000. 7 years. Then it took 1 year to grow it to 100,000. Then it took another year to shoot it beyond 500,000. So how do these figures come through? The problem was my mind, my mindset. I wasn't mentally prepared. I was not mentally prepared. Here I am. I once bought counter A for 9.65 cents. That was Econet actually, when they did their debentures and rights issue. For 9.65 cents, the debenture and the share combined. Econet, the share price was about 5 cents thereabout. It grew to more than 60 cents. That was 12 times the return. And guess what I did? I sold. The day the money credited my account, I couldn't believe it. I couldn't believe it. I went back to the broker. I said, did you not make a mistake here? I don't want to get in trouble. They said, no, it's your money. You made this profit. So we need to work on our mindset. We really need that toughening of our mental state so that when we get on this market, we're able to explore and squeeze the best profit we can out of it. And you see, the stock market is the only place where you can multiply huge money, like big money. If you're running a business and you start at 5,000, you grow to 10,000, you grow to 20,000, you grow to $500,000. You can't proceed to Mbaremsika and buy all tomatoes, onions, chilies for $500,000. That will be truckloads upon truckloads. So you find that in normal, subsistent business, the more the capital grows, the more difficult it is to turn and convert. But now in the stock market, the more the capital grows, the bigger you grow. Because this is a $3 billion market, which is supposed to be around $40 billion. So it has capacity to absorb you, your ambitions, and all you can ever dream of. So we really need to work on our mindset when it comes to the stock market. So having said that, we also need to consider the risk aspect of the stock market. So every asset you buy into has an associated level of risk attached to it. So you can't say I want the return without consuming the risk. It's literally impossible. That's why we have those those indicators like the risk-reward ratio. What are we saying about this? We're saying for you to get this reward, what level of risk are you able to tolerate? So the stock market is risky if you don't have the adequate information. The stock market is risky if you don't have adequate strategy on dealing with it. The stock market is very risky if you're not a strategic implementer of the strategy based on the information you've had. So we need to be able to tolerate a level of risk before we go on the market. But what's the cushioning factor on when you're considering risk? Make sure that you bring surplus on the stock market. I've said this more than 50 times. Those who know me very well. Make sure you bring a surplus on the stock market. And what is a surplus? A surplus is funds you have after you remove expenses from your income. Free funds, I should put it that way. That surplus, when you have a surplus, you can come through and be able to absorb risk so that you can get a reward. Here comes the challenge. If you don't have a surplus, then you borrow, then you place funds on the market. Then your lender is now requesting funds. You have an obligation to perform. That's where you come and have to sell at whatever market prices which are there. And if there is a bear run, you're forced to sell low. To who? To the one who has access to excess. So always make sure that you have an access to excess, which is funds which don't have any attachments. And so the major point is you need the strategy to hit on the stock exchange, but you need the means as well to hit on the stock exchange. So life succeeding on the stock exchange does not start and end at the stock exchange. It begins elsewhere. It begins with the level of economic activity which you are performing wherever you are. So you need access to excess. The moment David faced Goliath, he had a sling in his hand. You can imagine if he wanted to fight Goliath without a sling in his hand and stones. That's a problem. Remember Moses when he was supposed to cross the Red Sea? The good Lord asked him, what do you have in your hands? So before we come to the stock market, what is it that you have in your hands? What is it that you have in your hands? If you don't have anything, trust me, you come on the market, you're going to fail. So the first place of success is in the sphere of economic activity. What is it that you're doing in this beautiful land called Zimbabwe, which is earning you $1? That which you are doing is where you begin the success story of the stock exchange, because there is where you grow your surplus. Then you have access to excess. And this excess acts like bullets in your machine gun as you attack on the stock exchange. So you can imagine you have your machine gun, but you don't have bullets to attack, or you have one bullet. You might shoot and hit, but you're not going to benefit because you're going to be overwhelmed by the enemy. So that access to excess, what artillery are you holding? Do you have enough ammunition to implement your strategy? Lest you're going to bite more than you can chew. So before we proceed to looking at the potential harvest and all, what do we have in our hands? Corinne spoke of a dividend. Dividend yield is 5%. So if you put $100 on the market, you're going to get a dividend of $5 a market. If I put $500,000 on the same trade, I'm going to make a dividend of 25,000 United States dollars on the same quarter. Let's compare the two. One is making $5, one is making $25,000 on the same rate of return. So for you to really benefit, let's look into your ammunition, build your ammunition. So you need to be unique in terms as far as resources are concerned, your means of production. Whatever you're doing, if you're cleaning cars, if you're cleaning 5, clean 100. If you're doing potatoes, you're doing 1 hectare, do 20 hectares. If you're doing gold mining and you're operating 1 hour a day, increase your hours. Whatever you are doing in the economy, this is the ammunition, that excess, which we then take to go on the stock market. Then when you come on the stock market, it becomes an easy journey. So we need to really focus on economic activity. And fortunately or unfortunately, the stock market is a GIGO kind of a setup. Gold in, gold out. You put $1, you get something, proportionally equivalent to the amount you put. So it's very critical to increase your level of economic activity. Right. So looking at the future, I think Zimbabwe Stock Exchange and the VFEX Stock Exchange will become the hub of investment going forward. Because when you look at the international community, it's very difficult to get a return of investment more than 5%. It's very difficult. Why is it very difficult? These are well-structured economies. And it's very difficult to maneuver in a rigid kind of an economy. So you find that placement of funds on the ZSE, for example, when you hit a return on investment of 10%, you might hit the headlines because it's very difficult, especially now under normal circumstances. 2-3 years back, it was possible to make humongous returns because there were blue swan events which came and affected the global market. We had the coronavirus, COVID-19. It shrunk shares from shares like Sasol, which was operating around 300 Rand, to as low as 20 Rand. So those were blue swan events, those events which just come once in a lifetime. So if we don't have any blue swan events globally, it's literally impossible to make more than 10% in terms of investment. You might make 10% probably on a portfolio of $100,000, but when we're talking of big money, it's next to impossible. So that's the beauty of the Zimbabwe Stock Exchange. It's an emerging market. Yes, we're not 100% engaged with the international community, which is a disadvantage. You can't raise funds easily, etc. But it's also a huge advantage because, in Zimbabwe, you find unique rate of returns which you've never seen under the sun. Believe you me, interest rates in the market today, microfinance companies are loaning people at 30% a month. And their clients are taking money, putting them in economic activity and returning without defaulting. That indicator alone should show you that this economy we're operating is highly yielding. It's highly yielding. You need $35 to extract a gram of gold. And you sell it for $100 a gram. So if you look at just that level of profitability, it translates into the liquid environment which we are swimming in. So you'll find every time you're driving, you can't drive for more than 1 kilometer without, going past a Raptor, going past a Fortuner. You drive in the city center, you can't go 5 kilometers without seeing a cluster development, being erected. All these are just fruits of showing you how fertile the ground is. But you need to do what I call KYT, know your territory. The moment you know your territory, you're going to get that high yielding return. When you come on the market again, KYT, know your territory. Invest in liquid stocks, invest in good companies at low prices, attend seminars. There are a lot of seminars which are advertised. I see all of them. Property seminars, stock exchange seminars, rate seminars. There are a lot of trainings which are being brought out by the Zimbabwe Stock Exchange. Attend them, at least just 5 minutes or 10 minutes, or go to their YouTube channel. Check what is it they're talking about. What is it? Because what you don't know will surely kill you. Don't be ignorant. You should know what's going on. Why is it going on? Who's saying it? Does it make sense or not? Put it on the test. So I'm saying that stock market is one place where we really have to operate and work on. So I think based on this, let me throw it back to the moderator, Rumbi, and say, guys, this is our market. We are the Zimbabweans. This is our Zimbabwe Stock Exchange. We need to participate on it. It will definitely buy you properties. It will buy you freedom, financial freedom. It will buy you that life you've always dreamt to have. Thanks a lot, Rumbi. Over to you.
Thank you so much, Courage, for that presentation. I think we've learned a lot. And I see we have a number of questions in the chat box. And also, we have enabled your mics so that if you have questions, you can also raise your hand, and then I can select anyone who would have had a question. But I would like to thank the presenters really for the presentations that they've brought to us. So I'm just going to go through the questions. After we're done with the questions, then I can just conclude and tell you about the platforms that we have, which is the ZSE Direct and the VFX Direct, and how you can access them. So I think I'm just going to start with the questions in the chat box. I tried to answer some of the questions, but I think there are other questions that are still there in the chat box. Okay, so the first question that I'm seeing says, what is the ZSE or VFX doing in order to incorporate everyone to participate on the stock market? For example, you mentioned the issue of bank account as a prerequisite, is a pre-requirement for one to open a trading account. But the reality is most individuals in Zimbabwe do not have bank accounts. How about if mobile wallets like EcoCash, etc. can be considered so as to target everyone? So I think I can take this question because it relates also to the direct platforms that we have. So we have the ZSE Direct and the VFX Direct. Yes, you would need your bank account, but however, we do have mobile wallets that we use on those two platforms. So if you're on VFX Direct, you can make use of your inbox, and if it's on the ZSE Direct, you can make use of your EcoCash. So another question that I'm seeing in the chat box says, is there any platform where the investor can get information on companies listed on the stock market, on the stock exchange, like the financials? So I think I shared the link of our website. So the ZSE website shows all the companies that are listed, and it also shows their latest financials. They are always uploaded on the platform there. And the same as the VFEX. VFEX also has a website. I shared the link as well in the chat box so that you're able to see all the listed companies and their financials. Another question said, you mentioned that I can also invest on the JSE. I wanted to find out how I can go about it since I will be considered a foreigner. Okay, we hadn't spoken about the JSE, but I think Courage can take up this question since he might be an expert in the JSE as well, so he can just give you a little guidance on how you can go about it. Courage?
Okay, so to invest on the Joburg stock market, the rules are basically the same as on the Zimbabwe Stock Exchange. You first need to open a bank account. So you can open a bank account with a bank of your choice in South Africa using your passport. And since you're a foreigner, you open what is called the non-resident bank account. So you open your non-res account. Then after that, you approach a broker of your choice, and they're also listed on the JSE, the list of brokers. Then once you approach the broker of your choice, you then open a trading account with them. Then from there, once your bank account and brokerage account is opened, the same rules which apply on the ZSE, you can only finance your investment from your bank account. So you then transfer from your non-res to the stockbroker's resident account. Then you have access to the platform and you can buy shares. Thanks.
Okay, thank you so much, Courage, for that response. I hope you were answered. The next question is, there are actually two questions, so I'm just going to join the questions because they seem as if they're asking the same thing. So the first question says, we need to know companies that pay dividends for a start for us who do not have much money but would love to grow. And then the second question says, if possible, kindly share the list of companies that pay dividends, especially for some of us who are just starting. I think, Corinne, you could give advice on this, or maybe just a brief on how you can assist.
Okay, like I mentioned, thank you for the question, Rumbi. Like I mentioned, the companies release financials half yearly, and they give trading updates, as well as at the end of the year. So, like Courage said, one needs to read and be able to know. As a broker, the companies that declare dividends are there, and let's go through the ZSE website and look for them. But what the companies that come to mind that are recently declared a dividend, we have on the ZIG, we have Delta, we have Econet, we have Hippo, we have Seedco. And then on the VFX, we have financials that are upcoming soon. But the companies that declared dividend in the first half of the year, we have Axia, we have Insco, we have Simbisa, and we have Padenga. But these change over time. So I would advise you to reach out to a stockbroker of choice, as well as checking on the ZSE website. They have announcements, the announcements page or announcements section, where they are giving you updates on which company has said what and what is going on. And then I also can just take this time to just answer a number of questions on the chat. One can trade directly with their broker or go through ZSE Direct or VFX Direct. And at the moment, unfortunately, one has to have a bank account, and for one to be able to trade on the exchange. And the minimum number of shares that one can buy is 1 share. And miners can also invest on the platform, or such as VFX and ZSC. What is required is that they need to have their guardian as the one who will trade on their behalf. And stockbrokers offer services for free in terms of advice. However, in terms of trading, there's a statutory fee, 0.92% for the ZSC and 0.6% for the VFX. So as and when you transact is when the stockbrokers get their commission. However, for them to give you advice and any other services, these are for free and they're complimentary, such as the price sheet. You can request to be added on their mailing list. They can send you the price sheet daily that shows how the market has traded. They also have reports that they have. Those reports are complimentary and they are for free. No one pays for those. And as for the contacts of the stockbrokers, I'm sure Rumbi will share the list, and you can also go on to the link. And then someone asked, when we go monocurrency, what will happen to our USD investments on the VFX? So the VFX is not a branch of ZSC, or it's a company that's housed in the Victoria Falls International Financial Services Center. So it has a special legal status as per the statutory instrument 196 of 2020. So it trades in foreign currency only. So it's sort of like our offshore market, but it is within the country. So what will happen is that your USD investments on the VFX will remain in USD because that is the legal framework. I'm just trying to go through and see if there's any other question that has not been answered. And then the requirements for one to list a company, I think Rumbi, please share with them the requirements of how one can list a company on the ZSC. And recently there was a training on that. So Rumbi can get you in touch on the information of how one can list. And then is it possible to become a permanent shareholder of a certain company, or do one just buy shares to dispose when the price is high and get a profit? You can be a permanent shareholder if you don't sell your shares. But when you decide to sell your shares, you are no longer a shareholder. And you would have decided to enjoy the profit for that time. I think I'll hand it over to Rumbi.
Okay, thank you so much, Corinne, for the responses that you gave. There's one question that I saw that says, what is the ZSE Direct? So the ZSE Direct is a trading platform for the Zimbabwe Stock Exchange. So what the ZSE Direct does, it allows you to buy your own shares and sell them in the comfort of your home. It's an application that we have. You can either use it as a mobile app or as a web app. So what you do when you want to access ZSE Direct, you just need to register. When you register, this is when you select your stockbroker. So in a nutshell, it's just a trading application that you can use as an individual wherever you are to trade your shares. This is where you buy your shares, this is where you sell them. Of course, you need to select a stockbroker because you cannot trade on the stock exchange without the stockbroker. But when you're using this particular app, there is no need for you to then contact the broker. You can just trade on your own. And how you trade on your own, this is where the bank account now comes in, where you need to then fund your account because it works as a pre-funded model. What do we mean by pre-funded model? You need to have money in the account so that you can buy the shares. So you can't just buy the shares and then pay later. You can't do that. So basically that's what the ZSE Direct is, and that's what it does. The other question that I saw, this is directed to Courage. It says, where is Courage saying he spends 20 minutes a day watching how the market is performing? Does the VFX ZSE apps have a live page where it shows the chat?
Okay, so yes, the ZSE and the VFEX do have a live platform where you can see live trades. And my preferred is what we call the view only terminal. So you can get in touch with the ZSE team, then subscribe for the view only terminal. So what it then does is the screen which Corinne is seeing in her brokerage firm and all other brokers is the same screen which you'll be watching. So you'll be watching the market live. So that's the one I'm saying I do check on a daily basis. So you need to get in touch with ZSE. I'm sure, Rumbi, you can further assist on that. But yeah, I use the view only terminal by ZSE.
Thank you so much, Courage, for that. I'd sent a question when someone said, is it possible to buy shares mid-year? Yes, it's very possible. I'd seen a response, but I just thought I should elaborate on that. Yes, it's very possible for you to buy shares any time of the year. We just have a market schedule. The market opens every day at 9 and closes at 1. Those are the trading hours. So every day the market opens at 9 and closes at 1, except for the weekends and the holidays. So any other time that is not the weekend and that is not a holiday, you can purchase your shares from Monday to Friday from 9 a.m. to 1 p.m. The other question is, what's the minimum reasonable amount needed to start investing in the stock market, and how soon can one typically expect to see returns? Corinne, can you please take this one up?
The minimum, I beg your pardon, please come again.
Okay, the question says, what's the minimum reasonable amount needed to start investing in the stock market, and how soon can one typically expect to see returns?
Okay, the minimum amount that one could probably start with is based on your financial plan and your financial goals. That is how, for us at InvestIQ, that's how we operate. What is it that you want to achieve? And when do you want to achieve it? The strategy that Courage spoke about is what will guide and help you on the minimum amount. So in terms of the minimum amount, on the via ZSE Direct and C-Trade or VFX Direct, the minimums are there on the templates. But what I would advise is for you to do something that is comfortable to you. This money that you want to put on the stock market, when do you need it by? And how do you need it? So that one is not prescriptive. It's what we would advise is that at least you buy 100 shares in whatever you want to buy. If you want to buy on the ZIG, at least 100 shares times the value of the stock. And even on the VFX, 100 would be advisable. But the true crux of the matter, I beg your pardon, is on you. What is your financial goal? What is your financial plan? What is it that you can part with based on the risks that are there on the market? And then in terms of the return I cannot say with exactness in terms of what would be the return, but I would suggest and say someone should leave their shares for at least 3 months for them to see a movement, or at least to be able to experience the dividends that will be declared in the company that they would have bought. I hope that's clear enough. Unfortunately, I cannot give a one-size-fits-all answer to this one.
Thank you so much, Karine, for the response. The other question that I have from the chat says, kindly advise on the charges or costs for a broker to run my account.
There are no charges for a broker to hold your account or to open your account. However, they charge transactionally. As I mentioned, it's 0.92% or on the ZSE, and then it's 0.6% on the VFX. And if you choose that these brokers or this broker becomes your custodian, there are then custodial fees that vary from broker to broker. But I do not see them being more than $5 per transaction. They are also transaction-based. So for them to hold your shares, there is no fee, a monthly charge or a holding fee.
All right, thank you, Karine. The next question says, how much time does ZSE and VFEX accept a proposal to buy shares from a company? So I think I'll try to answer this one. I'm assuming that you're asking if you have your funds and you have everything that has been set, you have your EDS account, you have your CSD account, and I'm assuming this is going to be on the mobile applications. They're asking how long it would take for your proposal to buy shares. So what happens when you're buying your shares is that we have what's called a bid and we have an offer. So when you're buying your shares on the ZSE Direct, for example, you put in your shares, the number of shares that you want to buy, and then you put in the price. So what happens is there should be someone else in the market who's willing to buy those same shares at that same amount. So there is no specific time, or there's no specific time really where we can say that it's supposed to take you 5 hours for an order to be accepted. No, it just depends with the board. So we have an order book. So on the order book, there are all the orders that would have been put in the system. So it just depends if someone is on the order book willing to then buy those shares from you, or the shares that you're selling, if there's someone who's willing to buy the shares as well. So it just depends with the type of shares that you're selling or the type of shares that you're trying to buy. And then the other question is, what is the minimum amount required to invest both ZIG and USD? So if you're using the ZSE Direct, which is the mobile application for ZIG, the minimum deposit, we have a minimum deposit, it's 50 ZIG, 50 ZWG Zimbabwe Gold. And then when it's in US dollars, which is the Victoria Falls Stock Exchange, it's $10. That's the minimum deposit on the platforms. But I think, Corinne, you can also tell us from the broker side if you have a minimum requirement. minimum amount that someone can trade with?
Our minimum is at least 100 shares in whatever they want to buy. So if you want to buy Econet, 100 times the price that it's obtaining at the moment. So that one has at least a decent holding. That is what most brokers have as their minimum, equivalent of 100 shares in value of whatever one needs to buy. Rumbi, did you hear my response?
Hi, Corinne.
Yes, I was checking. Did you hear the response? That
Yes,
Okay, that's fine. Thank you.
Okay, so I was on the question where they were asking, when choosing a stockbroker, what are the considerations that you're looking for? So our stockbrokers are basically the same, because the main mandate for the stockbroker is licensed and regulated by the exchange and by the Securities and Exchange Commission of Zimbabwe. So we believe that all the stockbrokers are operating the same, their roles are the same, they're going to do the same. So you as an individual client, you just then need to do your due diligence. If you have relatives who have used stockbrokers before or friends, those are the people that can then recommend which kind of stockbroker you can use. But us as the exchange, we just believe that all the stockbrokers are the same and you can just choose from the pool of the stockbrokers that we have. Another question is, I'm on the ZSE Direct application and I would like to know if it is possible to deposit USD funds on the application and also buy shares in USD rather than ZIG. No, you cannot do that through the ZSE Direct. The Zimbabwe Stock Exchange solely operates in the local currency. So if you're buying your shares, they need to be in ZIG. Another question is, any stockbrokers out of Harare, because most of them are in Harare? As far as I know, yes, all the stockbrokers are in Harare, but you can still contact them or you can still email them. They are always available. They're always available and they can give you feedback as soon as you just get to them. All right. If there are any other questions, you can hands and then you can unmute and then we can respond.
There's someone in the chat room, if you don't mind, who says they didn't get what I spoke about, 15% up or down on the ZSE and 20% for the VFX.
Okay, you can go ahead.
Okay, so the market moves upwards or downwards. It's kept within the parameters of 15% for the ZSE. So on any given day, the market can trade upwards or downwards in terms of the trades. So for example, if a counter opened at $100, $100 is the price that it traded at yesterday. So it can go down 15% or go up 15%. So 100 down 15% will be 85 cents or $85. And then if it's going up, it can only trade up to $1.15. So it can go upwards or downwards within that parameter for the day. And then if it moves, the only movement that can happen is on the following day. So on the trading day of Monday, it can move upwards or downwards of the trading closing price of Friday. And then on Tuesday, it starts with the closing price of Monday. So that is on the ZSE in ZIG. But on the VFX, it can move 20% up or 20% down. So that would be my comment on that concept. And I'm available to explain further. I'm sure Rumbi will share our details, and then we can have practical, examples of how it can go up or down. So which means that when you place your order with your broker, you are guided by those parameters to say, yesterday, Thursday, what price did the counter that I want to buy close at? So which means I can only buy 15% cap from yesterday's price up to today. Or if I'm intending to sell, it means I can only sell 15% up from yesterday's price. So if I want to sell much higher than that, it means I need to wait and see how it trades today, and then probably trade in the next trading session. Maybe it would have gone up to the 21% higher than yesterday's closing price that I want to target to. Then account openings can be done online or physically. You send your broker of choice an email, and then they send you the requirements, and then you can send back. And physically is also acceptable. Sorry, I took the opportunity to just respond to those responses at once. Back to you, Rumbi.
All right, thank you so much, Karine. So I'm just going to take these two questions in the chat box, and then I see a hand from Donald Tawonga, and then you can go ahead. So the two questions that I have are, what are the charges for using ZSE Direct? So when you're using ZSE Direct, on the buying side, the charge is 1.693% of the total trade, the total amount of the trade that you would have made. It's 1.693%. And then on the sell side, when you now want to sell the shares, it's 2.443%. And then for the VFX, it's 1.2% for the buy side, and it's 1.030% on the sell side. And then the other question is, on your platform, are there any demo platforms to allow to practice before funding? Unfortunately, we do not have any demo accounts for practicing. I hope you were answered. Tawonga, you can go ahead and ask your question. Okay, I'm not sure if Tawonga can hear me. So whilst we wait for him, I can just answer this other question. It says, may you please list books which we can read to enhance our knowledge on how we can master the stock market analysis. So as an individual investor, I would recommend you to also use the ZSE Training Institute. We do have a training institute. So I'll share the link in the chat box for the Training Institute. You can access the Training Institute and just register. It's free. It's free for anyone who would want to know more about the stock market. And it also offers quizzes at the end of each session that you would have taken. Also, Karine, encourage, if you have any books that you think would be very helpful to our investors to start, you can as well recommend in the chat box. Okay, we have a hand from Divine. Divine, you can go ahead with your question.
Hello, everyone. My question is it possible for one to become a stockbroker?
Okay, thank you so much, Divine, for that question. I think, Karine, you can take that up.
Thank you, Divine. Thank you, Rombi. Yes, it's possible for one to be a stockbroker. You need an educational background, degree in finance, economics, or business administration, or professional certification, which is 4 SciFem exams. So the process is after your program, you need to pass after your degree, or you need to pass the 4 SciFem exams with 80%. You also need to serve under a broker for at least 18 months in the back office, and also train with the stockbroker. So I would estimate the total time to 3 years. And then you are a broker. There's also the police clearance and capital adequacy issues that come about, but generally I would say invest time to get a degree in finance, economics, or pass SciFem exams, and look for employment with a stockbroking firm and serve under a qualified broker for a minimum of 18 months. There are also oral exams that are there for part of your licensing, but it's all part of the 3 years.
Thank you so much, Corinne. I hope Divine, your question was answered.
Thank you so much, Karen. Yes, it was answered.
Okay. So another question here says, so I would like to buy shares using USD. So there isn't a way I can buy shares on local stocks using USD. Okay. So for the ZSE, you can't buy your stocks using the USD. But also the companies that are listed on the VFEX are local companies. This is where companies like Corinne was talking about Insco, about Simbisa. These are local companies, and this is where they're listed. So yes, you can buy shares in USD for local companies that are listed on the VFEX, not on the ZSE.
And also, in addition, Rumbi,
Yes.
one can transfer funds if they are transferring funds from outside the country and they want to buy shares on the Zimbabwe Stock Exchange. They just need to alert their broker that these funds are for the Zimbabwe Stock Exchange, and then the funds will be converted at the official rate into ZIG, and then they'll be able to buy shares in ZIG. But if their funds are earmarked for outside the country for VFX, they'll be used for that. So it's a matter of communication with their broker so that they are given the correct trust accounts to send the funds to. If they are coming from outside in US dollars, they can be converted into ZIG if the purpose is to buy on the Zimbabwe Stock Exchange. However, the broker will have to explain all the repercussions and how it will probably translate in terms of ZIG.
Okay, thank you so much. Courage, this question is for you. It says, Mr. Nemangwe is an experienced investor. Do you offer one-on-one or small group trainings at a fee?
Okay, Rumbi. So I'm still yet to engage in that platform. So probably the beginning of 2026, we should be setting up office and consultancy, so that we can assist whoever wants to come through and take up opportunities on the ZSE, VFEX, and just the general environment in Zimbabwe.
All right, thank you so much, Courage. I think I have exhausted all the questions in the chat box. If there's anyone with any other questions, I'm going to leave my email, and then I'll leave Corinne's email and Courage's email as well, so that you can get in touch. I've been seeing a lot of questions about the presentation on if it was recorded as well. So yes, it was recorded and it's going to be shared on our YouTube channel. I'll also share the link when I share the presentations. So I'm going to share the presentations on the emails of everyone who had registered. I'll have the emails for the people who've attended as well. And then I can share the presentations and the link of the YouTube channel so that you guys can redo the recording if you'd like. But if you'd like any questions, I'm going to attach my email in the chat box. And you guys can just email me. But thank you so much to everyone who has managed to join the webinar. I think this was quite insightful and people learned a lot today. So thank you guys. If there's nothing else from the presenters, I think we can adjourn the webinar.